My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you some money. My job is not just to entertain you, but to educate, teach. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Look, we can spend the whole day arguing about whether Netflix still counts as a growth stock after that not-so-hot forecast. Oh, it's a fun parlor game. We can talk about the meme stocks endlessly, like AMC, the troubled movie theater chain that just gave CEO Adam Aron the chairman job, too. Smart move. He's done an incredible job tapping the Robin Hoodie shareholder base for capital that AMC needed to stay alive. But after just an incredibly swell day for the bulls, Dow gaining 286 points, S&P climbing 0.82%, NASDAQ jumping 0.92%, I want to tip my hat to a company that's doing everything right and show you exactly what doing it right means in this market. And I am talking about Chipotle, which surged 11.5% today on a fabulous quarter that shows you why individual stock picking still matters and why it's easier than most experts would have you believe. We know Chipotle was gettable because I've been telling you it was headed to $2,000 for the last 600-odd points. It closed at $17.55, up $181. At this pace, it won't take long to hit my price target. Before I get into Chipotle, though, let me explain why this market can be so confusing. I mentioned Netflix a second ago because I heard endless chatter today about whether their growth story has run its course. This is something I take seriously. After all, we're the ones who coined FANG, the acronym for Facebook, Amazon, Netflix, and Google. But you know what? If you find yourself debating whether something's a growth company, it probably isn't much of one anymore. I think Netflix is a terrific business. Subscriber. But the stock only started going higher last night when management mentioned they were working on having some gaming stuff. I mean, then they started preaching the virtues of interactive entertainment. What I want from Netflix is content, good content. If they don't have enough good content to get lots of new subscribers around the world, that's a big issue. The fact that they're buying back stock is of no interest to me. I want sign-ups, global sign-ups. I don't want pull-throughs, as in the pandemic pulled through subscriptions last year. I don't want to hear about gigantic runways when the runways are clogged with planes from HBO and Disney. I just want the Netflix of old, where the conference calls were fun and jovial. The kingpins of entertainment kicked around which of their shows were the favorites this time around. I used to read the Netflix call to my wife because I wanted to persuade her to watch the shows recommended by the CEO, Reed Hastings. Not this time. This time I found myself thinking, oh, man, I got to finish this conference call. I mean, there's another entertainment company. So does that mean it's time to rip the N out of FANG and replace it with something that sounds a lot less poetic, maybe FANG or FAMAG? I still can't go there yet. I want to see what Netflix's slate of content looks like when production is no longer hampered by COVID. But after last night, you need to understand, when people say Netflix growth status is debatable, that means the debate is over. Company currently lacks the growth to be a member in good standing of FANG. How about the meme stocks? Oh, these people want to buy new or near penny stocks of companies that might never make a dime that you've never heard of, or older companies where they can crush the short sellers, which is what they really are about. And that's why the news from meme stock poster child AMC that Adam Aron's being promoted from CEO to chairman and CEO passes as a big deal. I think the Wall Street Bets crowd fundamentally misunderstands the nature of AMC's success story. Aron kept his company alive by selling them stock at inflated prices, allowing his theater chain to outlast the pandemic. I say give me a break. I am not interested in zero-sum situations like AMC. I am interested in companies with magnificent sales and earnings, like Chipotle. Okay, so what happened last night that catapulted this stock? This stock up more than 11% in a single session. What, takeover maybe? Some tremendous upgrades? How about culture? Culture, that's what happened. This company has an extraordinary culture of customer-centric innovation, and that culture has been turbocharged since they hired Brian Nicoll as CEO, when Chipotle stock was languishing in the 200s after a series of health scares. Again, it's in the 1700s now. We always hear about these executives who say a crisis is a terrible thing to waste. You know, most of the time they're just blowing smoke. Not Chipotle. Chipotle delivered. When the pandemic hit, management recognized they had to use every form of technology to make the company as profitable as possible. Everything from the best digital ordering system to the creation of their own bots that answer frequently asked questions in order to free up staff, make great food. They recognized that they could do enough delivery through DoorDash to get the food when you need it. They understand that drive-thrus, we call them Chipotlanes, could be a major source of growth thanks to COVID, and it sure was. In the old days, Chipotle restaurants routinely did 2.5 million in volume. That's an incredible number. Amazing versus almost every other chain. But now, because of what they learned about technology, including how to build loyalty, they have 23 million members, up from nothing 2 years ago. And they think that $3 million per store is now doable. That's insane. Yes, they learned that much and paid them $3 million. It's inconceivable they can do it, but they're going to do it. You often hear that no one can find workers in the service industries. How many times do you hear that? Oh, supply chain, can't find workers, can't find workers, can't find. How about this? Maybe they don't know how to find them. Maybe they don't know how to look for them. Or maybe they're just cheap and stupid. Not Chipotle. As Nicoll told us in the conference call, their coast-to-coast career day event last week allowed them to hire thousands of additional team members. Thousands. Sure, they have some inflation like everyone else, including wages that moved to $15 an hour, but they can easily pass that on to the consumer with a 3.5 to 4% price hike. I mean, did you really notice that on your bowl? I didn't. But the most important thing is that unlike nearly every company I follow, Chipotle held on to its digital gains after the great reopening. Was it the cauliflower rice? The lifestyle bowls? The burritos and Bitcoin promotion? Nah, it was the whole shooting match. A company that can earn $7.46 when Wall Street was only looking for $6.49. A company that can easily more than double its domestic store count while vastly increasing the profits per store. This is a company that's not speaking authentic Silicon Valley gibberish when it says it's evolved into, and I quote, a real food-focused digital lifestyle brand. The bottom line? Go ahead, debate Netflix's growth or lack thereof. Ponder how the heck AMC could be worth more than $21 billion, even as it fights for survival by taxing its Robin Hoodie shareholders. But I think you'd be better off buying a chicken burrito and a share of Chipotle.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.